Wall Street has been trading in the green for the second day in a row, and the market finds support from upbeat corporate reports. Investors are trying to puzzle out whether the stock market has begun a rally, while analysts are warning about risks. InstaForex analysts are ready to tell you about market catalysts. As expected, Wall Street opened on an optimistic note on a Monday. The three major stock indexes grew yesterday in a sync. The Dow Jones added 500 points or 1.86%. The Nasdaq showed the best performance, having gained 3.43%, and the S&P 500 rose 2.65% intraday to close at 3,677 points. The New York pre-market today looks equally promising. The benchmark indexes are all gaining ground, signaling fragile optimism on Wall Street. The intraday CAD for the S&P is seen between 3,690 and 3,820 points. Neglecting the hawkish US Fed, the market is inspired by companies with a mega capitalization. After mixed financial reports by top American banks, investors found a source of optimism in the next portion. The benefactor of a market optimism on a Monday was the Bank of America. It reported a 12% surge in corporate profits. The good news pushed up not only the stocks of the second largest US bank, but the whole banking sector. Goldman Sachs is due to publish its report today, and previously its experts said that the S&P is still overvalued despite a 25% slump this year, so Goldman Sachs predicted a further bear market. Wall Street was propelled also by a 7% jump in Tesla shares despite a tepid start to October. Analysts still believe that CEO Elon Musk will ensure a 60% growth of corporate earnings and a 48% rise in revised profits. Meanwhile, Tesla stock is fed by high expectations and the hype, which enabled a 4% growth on a Tuesday. Stocks of Apple, Microsoft, Amazon and Meta traded considerably higher in the pre-market. The corporate report by Johnson & Johnson was beyond market expectations in terms of quarterly profits, thanks to a high demand for medical appliances. The company's shares climbed to 2.1% to $170 apiece in the pre-market. The total sales expanded by 1.9% in the third quarter. Netflix is another company with its highly anticipated report to set the tone on Wall Street today. The streaming giant is expected to add more than 1 million subscribers in the third quarter. Besides, Netflix might report on a revenue growth, though the smallest in the company's history, and stronger than expected data could trigger another buying wave. Amid expectations, Netflix shares have appreciated 5%. As for the currency market, the US dollar is braced by a growing appetite for risk. Its index rebounded off 111.80 and turned to 212. In fact, the US dollar index is hovering at around this level within the intraday corridor between 111.70 and 112.50. The currency market is marked by turmoil. The sterling and the yen remain under the spotlight, while the greenback is taking a back seat. Upbeat corporate reports do not benefit the US dollar, as they set the stage for their risk-on mood. At the same time, the Fed Reserve is unwilling to soften its hawkish rhetoric amid soaring inflation. Hence, investors could shift focus back towards safe haven assets. And the rating firm Fitch downgraded its forecast for the US economic growth for this and the next year. The agency said that aggressive rate hikes by the US Fed on the back of a high inflation would push the US economy into recession, like in the 1990s. Fitch analysts predict a moderate recession, with the unemployment rate at 5.2% in 2024 compared to the current 3.5%. It means the loss of millions of jobs, though a lesser extent than in the two previous recessions. The fresh statistics indicate resilience of the US economy. The industrial production expanded by 5.3% in September in annual terms, much stronger than the upgraded growth of 3.9% in August. The indicator rose 0.4% in March, twice stronger than the consensus of a 0.2% increase. The Canadian dollar has gained more than 1% since its opening on Monday. It settled at 1.37 against the US dollar. The currency pair is expected to trade in the intraday corridor between 1.3680 and 1.3740. The Canadian dollar found support from the business outlook survey by the Bank of Canada. Inflation expectations for the third quarter remain elevated. So, 77% of firms expect consumer inflation at 3% for 2 years ahead, and this reinforces the arguments for a further series of rate hikes. The survey also reads that most consumers foresee a recession in the nearest 12 months. Today, the fresh economic data showed that the Canadian housing market is still healthy. According to the Mortgage and the Housing Corporation, the number of housing starts surged by 11% in September on months. That equals around 300,000 units, much higher than expected. It's the strongest reading since November 2021. The statistics fit the hawkish stance of the Bank of Canada, thus keeping the loonie afloat despite falling oil prices. Today, commodities are trading lower amid fears that Joe Biden could release another 100 million barrels of crude from U.S. strategic reserves. As a result, both benchmark rates lost almost 5% on Tuesday. Brent crude futures are trading now at $90.87 a barrel. Bitcoin is driven by cautious optimism. Though the token is trading higher, it's unlikely to develop a steady rally. The crypto is hovering at around $19,600, lacking momentum to break higher. The crypto market is about to dip again. Though Ethereum is still holding above $1,300, it has shed 0.2%. The crypto market is unable to develop a risk rally. Perhaps digital assets will click into gear at the time of Tesla's financial report. And for the time being, Bitcoin is trapped in the range between $18,800 and $19,800. A fresh batch of corporate reports will show whether Wall Street can summon optimism, and our analysts remind you of a high volatility in the nearest days. So make prudent decisions with the InstaForex and keep close tabs of the market developments on InstaForex TV channel. See you tomorrow.